Hello and welcome to our discussion on the ProShares Short S&P 500 ETF, or SHISH for short. First, let's start by understanding what an ETF is. An ETF, or exchange-traded fund, is a type of investment vehicle that allows investors to buy or sell shares in a basket of securities, similar to a mutual fund. However, unlike mutual funds, ETFs can be bought and sold throughout the day on a stock exchange, just like individual stocks. Now, let's delve into the specific ETF we are discussing today, the ProShares Short S&P 500 ETF. This ETF is designed to track the inverse performance of the S&P 500 index, which is a widely followed benchmark for the overall US stock market. In other words, when the S&P 500 index goes down, the SHISH ETF should go up, and vice versa. One key aspect of the SHISH ETF is that it is a leveraged ETF, meaning it uses financial derivatives and borrowing to amplify the performance of the underlying index. In this case, the SHISH ETF uses short selling and other techniques to achieve daily returns that are 2 times the inverse of the S&P 500 index. This means that the SHISH ETF can potentially provide much higher returns than a traditional, non-leveraged ETF that simply tracks the inverse performance of the S&P 500 index. However, it also means that the SHISH ETF is riskier and more volatile, as it is more sensitive to changes in the underlying index. Now, let's discuss the potential uses and benefits of the SHISH ETF. One possible use for the SHISH ETF is as a hedge against a downturn in the stock market. If an investor believes that the stock market is likely to decline, they can use the SHISH ETF to profit from this potential decline. In addition, the SHISH ETF can be used as a tactical trading tool for investors who want to take advantage of short-term market movements. For example, if an investor thinks that the S&P 500 index will decline over the next few days or weeks, they can buy shares in the SHISH ETF to profit from this potential decline. However, it's important to note that the SHISH ETF is not suitable for all investors. Because it is a leveraged ETF, it is much more risky and volatile than a traditional ETF, and it is not intended for long-term investing. In addition, the use of financial derivatives and borrowing can increase the ETF's costs, which can impact its overall performance. So, in summary, the ProShares Short S&P 500 ETF, or SHISH, is a leveraged ETF that tracks the inverse performance of the S&P 500 index. It can be used as a hedge against a downturn in the stock market, or as a tactical trading tool for investors looking to take advantage of short-term market movements. However, it is important to understand the risks and volatility associated with this ETF, and it is not suitable for all investors.